Good morning. There was some important moves overnight that I just wanted to cover off on, both the S&P and also with gold. So we'll start with the S&P index first. And as you can see, there was a bit more of a sell-off than what we've seen. You've really got to go back to the 6th of March for a sell-off like we had. I've been speaking over the last couple of days about the fact that we would be perhaps working off this overbought situation in the S&P by having more of a choppy sideways action, and certainly that's what we're seeing now. So the question is, have we topped out a couple of days ago, and is the S&P now finished its run, or has it got more in it? I think we would need to see a close below 1386 to say that the market has finished its run and we're going into more of a significant decline. So that's the key one to look at, 1386, a close below there. I think looking at how strong this market move has been since the October and December lows, it would be very unusual if it just went straight down from here. I think the topping process will probably take some little time, if in fact it is topping out now. So I still think the odds favour more sideways to maybe a little bit of up, and there is certainly some precedent for the market firming just before and just after Easter, so I wouldn't be at all surprised to see a rebound tonight from what we saw overnight. So short-term traders, I believe, should probably take a prudent step and look to maybe cash up a little bit, just so that you've got some cash. If the market does go down further from here, there'll be some good buys. Long-term traders, I don't think there's enough information yet to make a decision, so probably just sit with what you've got. Now, importantly, we've been looking at currency and bonds. The US dollar did go up last night, but bonds were down fractionally, but not that much. So the importance of bonds, of course, is about inflation expectations, and you can see we had two quite strong days over the last four, off just a touch last night, but I still think we're looking at certainly stronger inflation expectations now than what we've seen for quite a while. Let's have a look at the US dollar. It did move up higher, and that certainly impacted gold and commodities in general, so pretty much everything was down overnight. So the question is, how will this impact the sentiment towards what we're trading, which is predominantly small cap stocks? And I think it's really all about the US dollar. If the US dollar keeps rising from here, then you'll see commodity prices come off, and I think that will impact the sentiment generally to the sector. But of course, just because commodities may go down does not mean that all small cap stocks will go down. Some that have got a good story will still continue to go up, so it's still very much stock by stock. Now let's have a look at gold, and you can see we've had the second sharp move in 2 days, which is a little surprising. I was of the view that we were heading higher. The 1690 area, as I indicated, was pretty important that we close above 1690, which was the highs of a few days ago. It's certainly, what's happened over the last 2 days certainly weakens the case a little bit for gold heading higher from here, but it hasn't killed it in my view. Now, the actual gold stocks themselves, if we look at the gold index, the GDX index, it's looked like it was basing, but has really taken a bit of a whack in the last 2 trading sessions, and it's now definitely down oversold. So if gold is going to hold around this 1620 area and head up from here, then I think we're certainly in the area where there's some great buying in quality gold stocks. But the key areas to look for, you really wouldn't want to see the gold head much lower than where it is, and you certainly look at the 1690, a close above 1690 to really prove that gold is heading back up from here. So there's a summary of the key markets overnight. Cheers.